Cryptocurrency exchanges and stakeholders in this space have been having a series of meetings with various government agencies as well as representatives of the people. So the Parliamentary Standing Committee on Finance, led by Jayant Sinha, met with representatives of the cryptocurrency industry today. There are reports that cryptocurrency exchanges have also met with the Reserve Bank of India earlier this month. Now, after this meeting, as per sources, the consensus has been that there will have to be regulation. A regulatory mechanism needs to be put in place. The outright ban option seems to be pretty much off the table, and concerns were also raised about the aggressive advertising by cryptocurrency exchanges bringing in new users on board. So what will be the shape and form of a kind of regulation which is being talked about? To speak more on this, I'm joined now by R Gandhi, former RBI Deputy Governor. Ajeet Khurana comes back, Bitcoin expert and founder of the Genezis network, and Praveen, Kumar, founder and CEO of Belfrics Group, also with us on the show. So welcome to all of you, and thank you for speaking with us. Mr. Gandhi, let me begin by getting your view. Right now, we know that the Reserve Bank, or at least that's what the RBI governor has said, they look at cryptocurrency trade right now as a serious concern. On the other hand, the finance ministry doesn't seem to be in any hurry to ban cryptocurrency trade. What, in your view, would be the appropriate regulatory mechanism to make sure that everything is kosher?
Thank you. Yes, there are concerns about the crypto assets, in what way they can evolve or they can be permitted to be transacted with. So there are various views. Reserve Bank consistently had been maintaining that to allow crypto assets as a payment instrument, it can lead to, definitely it can lead to financial instability. So there are concerns about it. So what we need to think about is that, short of being a payment instrument, whether crypto assets can be recognized as an asset itself and allow the normal dealing with an asset. That is a kind of via media, which we will have to explore. Looks like things are moving in that line. Hopefully, certain the regulations which will come, which will protect the against misuse of the crypto assets as a payment instrument or any other wrongdoings. So that's why we need to look at it. So in principle, it is good, but the point is how exactly the regulation will evolve, we need to see.
Absolutely. So in many parts of the world, or some parts of the world, cryptocurrencies are also accepted as a form of payment. Praveen, Kumar, do you see that as completely out of the question in the Indian context? What kind of regulation do you envisage coming about?
Thanks for having me on the show. So in regards to the regulation, I don't think so that you can completely, remove the crypto assets from the payment sector. So there's going to be a combination of both crypto being looked at as an asset and also in the form of payment. So definitely RBI might not classify this as a currency at this point in time, but eventually that is going to happen. So the steps that they are taking in right now, it should have been taken way before, because we all knew that this is going to come in. So understanding the system and understanding how to regulate, this should have been taken up way before. So anyway, sooner or later, so this is going to happen. So I feel so that there's going to be a multi-regulatory regime that will come in. One, SEBI might regulate the trading aspect and RBI might regulate the money laundering aspect. So we exchanges might have to report to two different agencies, because these assets can be moved from one country to another country. So I don't think so that this can be only brought under SEBI's regulatory framework. So there should be a combination of both.
So you're asking for a multi-regulatory kind of a body, or more than one body. Ajeet Khurana, would this be the apt kind of a situation, and where does investor protection fit into all of this? Because remember, the biggest trigger right now is the question of investor protection. A cryptocurrency bill was always expected in the winter session of Parliament, and it will be tabled. But the reason why all of these meetings are also happening is because people have been watching, regulators have been watching all of these very aggressive ads on television and on newspapers saying come and buy crypto even at small amounts as less as 100 rupees, and are worried that people who don't understand it are beginning to invest. What kind of regulation do you think will be apt to protect this class of investors?
Investor protection is foremost, and that is why I was very glad when Narendra Modi ji, talked about that aspect of it. So that goes without saying. I must point out one interesting thing, Tamanna, is that while you are using the word cryptocurrency, neither Mr. Gandhi nor Praveen is calling it that. They are calling it crypto assets, because that is where the regulatory climate in India is headed. Everybody has now reconciled to calling it a crypto asset. In fact, the industry body is no longer called the Blockchain and Cryptocurrency Committee, but Blockchain and Crypto Assets Committee. Having said that, what Praveen has said about a multi-regulatory approach, while it seems that given the nature of this beast, that might be the way to go, but I don't really think regulation actually works that way. Like, how many things are there which, some aspect RBI regulates, some aspect SEBI regulates? I agree, it's in the character of, the exchange which SEBI looks at, and some aspect of money that RBI looks at, but it is going to be a challenge. And hence, to begin from the consumer protection point, I think is the best way, and that is what everybody has done. One little thing I'll tell you about this, where Mr. Gandhi said about don't use it as payment, and Praveen says it's going to be inevitable. I think that has become a huge bone of contention. And 3 years ago, this was a debate in industry, but as of the last 2.5 years, even players within the industry have said, you know what, we're going to stop calling it currency. We're going to call it crypto assets, digital assets, and not a payment system. What happens in the future will unfold.
No, you may call it whatever, but the fact is that it is being used as a payment system, and it is being used to move value from one place to another. Mr. Gandhi, is that the real concern? The concern seems to stem from, do we know about what sources of income are? Can this technology be misused to evade taxes or move money gotten from illegal crimes? And how are you going to hone in on that? Do you think something like KYC norms and whatever we have in our current system is going to be enough, considering the technology of blockchain?
See, the very starting principle of crypto is based on the idea that it will be away from public authorities. That is tax evasion and related things. So that is a very starting point of the Bitcoin or any of these things. So that is where the technology was developed from that perspective, that it should be a privately transacted instrument away from the public authorities' views. So that is why the conflict has risen, and how to, because no organized society can permit that. So that is where the trade-off will have to be, how it will be possible for us to ring fence it. There are methods. It is not that there are methods. There will be a half method or whatever it is, but that will have to be done. When we recognize it as, because when two people transact as an informed adults, so then by economic or law should permit that to happen. That is the asset side of it. But the moment you want to do it publicly through an exchange, then there are certain regulations which will be possible to put in, because there is already quite a lot of precedent about how an exchange should be there and what kind of customer protection structure we need to bring in. Certain ready infrastructure is available in terms of regulatory structure. That can be started, that can be fine-tuned to suit the crypto assets. That's where we have to start. But definitely there will be a lot of hesitation or little ring fencing about letting that not to be used for payment purposes.
No, so Mr. Gandhi, let me follow up with a question about investor protection, because that seems to be the foremost concern, even from what came out from the Prime Minister's meeting over the weekend on Saturday, and the news reports that came out after that, quoting sources, seem to suggest that investor protection was the foremost concern, so that people don't in a very gullible fashion, get into this just to ride the wave, etc. So how would that happen? Do you envisage it as, say, a limitation on the amount of investment that can be made?
Yes, because that is a standard method, because of the people who can be allowed to be dealing in through exchange on crypto assets, that are minimum standards in terms of their financial awareness and strength and other thing, their capacity to bear the risk. Those kind of things can be certainly be put, because it must be a person who will be able to bear the loss of not getting the full value of his investment. That there are methods of doing it. To begin with, the threshold could be higher. Later on, based on whatever experience that we have, the threshold can always be either lowered or increased as we go on.
Okay, so Praveen, I want you to come in on this. In terms of investor protection, of course, cryptocurrency exchanges and those in the system will say that, hey, we'll educate investors and we'll put out information so that people know what they're doing. But the fact is, a lot of people are jumping onto this bandwagon without understanding fully what's happening. And the advertising right now seems to say that don't worry about it. You will make money because of the crazy gains that we've been seeing. So do you think a threshold is a minimum threshold or a maximum threshold for investment is viable?
There should be more innovation on this, putting a cap on the investors to, be part of this ecosystem. I don't think so that's the right way. Just to answer the previous question also, you mentioned about the privacy transaction, all right. See, the blockchain-based transactions, if rightly regulated, the government gets a bird's eye view of what is happening as compared to the cash system currently, which is predominantly used for the money laundering. As and when this system is brought onto the blockchain-based system, you can actually curb the money laundering in a pretty good way. So it's only that, the agencies and whichever the stakeholders who are involved, they need to understand how to see the system and how to be with the system to regulate that. So if you are there in that, you will be able to understand and see where the money is going, where it is being parked, everything. So coming back to the investor protection, each and every exchange are doing many things. So whether you are referring to the hacking or whether you're talking about the safety of the exchange, all these are taken care by insurances and all those stuff. But if you're talking about the fluctuation of that particular asset, I think that should be left to the investors with a fair amount of protection in whichever way that the government feel the right way. So technology is evolving, and innovative methods should be adopted rather than the pretty old system.
That's the whole challenge, isn't it? This is a very new system. Regulators right now are scratching their head and authorities are scratching their heads over who will regulate. Will this come, say, under a SEBI-like system or under RBI or a mix of both? Ajeet Khurana, do you think now there should be a minimum requirement to allow people to invest in cryptocurrency, or would that be retrograde in your view?
There are two approaches to go cautious. One is the accredited investor method, which requires a certain net worth or clearing of certain tests. And the second is having a minimum threshold. SEBI, for example, for its alternative investment funds, has kept the minimum threshold requirement. Now, in principle, this sounds good, but I don't know when 1.5 crore people have already invested. And my bet is that if the threshold were significant, then probably 90% of those, maybe even a little more, may not meet the threshold, but they already hold the assets, right? So it becomes a little difficult, unlike an alternative investment fund where, it is starting new. So with the first investor, you can implement that. In principle, I'm not opposed to it, but two problems come up. One is how do you grandfather things? And second thing is that the very nature of telling the common person who may not meet the threshold that you cannot participate in this economic revolution because you don't meet the threshold actually also feels a little painful to me.
Yeah, it is, you will have to provide a level playing field. Perhaps have an AMC kind of a situation like you have for equity. For those who are not completely aware or do not have the time to track it, you have an AMC kind of situation. So a lot of innovative solutions will have to be found. Step one perhaps has begun of that. Thank you so much to all of you for joining us on this important important chat today.